Greetings. This is Market Wisdom for Traders, episode 73, delivered by Twigbe Ehizuki. For forex, stocks, options, commodities, gold, crypto, and all forms of chart-related trading. The idea is to improve your trading knowledge and profitability. Your advice to subscribe and to call on us for training and account management. I've been on this for close to 2 decades now, and we have all it takes to ensure your consistent profit return, either as an individual or as a corporation. I've argued for a long time that trading is 100% psychological, and that psychology includes position sizing and system development. If at least two people can do something well, then that skill can be taught to most other people. Investors and traders usually go through 2 stages before they find the essence of the Holy Grail. First, they need to find someone to tell them exactly what to buy and sell in the market. Second, they search for someone to tell them how to do it. When neither of those 2 processes works, the few remaining survivors move on to the final stage, putting themselves into a state of mind so they can find a trading system that is right for them. We typically trade our belief about the market, and once we've made up our minds about those beliefs, we are not likely to change them. And when we play the market, we assume that we are considering all the available information. Instead, our beliefs, through selective perception, may have eliminated the most useful. By Van Tapp, PhD. Kapopa points out that progress in knowledge results more from efforts to find fault with our theories, rather than prove them. If this concept is true, then the more we tend to realize our beliefs and assumptions, especially about the market, and disprove them, the more success you are likely to have making money in the market. Most data vendors are fairly accurate with respect to daily bar charts. But when you start using tick data, 5 minutes bars, 30 minutes bars, etc., accuracy goes out the window. When you think you have a good system, you can simply have a poor data. Conversely, you might think that you have a bad system, when what you really have are poor data. The chance of winning $1 million in a state-run lottery is about 1 in 13 million, and the odds are much greater if you expect to win more. Brokers have found that if they help people pick numbers by reading off entry points on radio and television shows, thousands of people will want their advice. If you are known to publicly give advice, no matter how accurate or inaccurate that advice is, people will consider you an expert. Unfortunately, once you are in a position in the market is going to do whatever it wants to do. You no longer have any control over anything except your exits. There are as many as 10 components to a professional trading system, and the entry signal is probably the least important. Nevertheless, most people just want to know about entry. People typically make the most money giving people what they want rather than giving them what they need. We don't look at data neutrally. That is, when the human eye scans a chart, it doesn't give all data points equal weight. Instead, it focus on certain astounding cases, and we tend to form our opinion on the basis of these special cases. It is human nature to pick out the stunning successes of a method and to overlook the day in, day out losses that grind you to the bone. Thus, even a fairly careful peruser of the chart is prone to leave the researcher with the idea that the system is a lot better than it really is. By William Eckert. When market wizard S. Sekota and Tom Boso claim that risking as much as 3% of your equity on a single position is being a gunslinger, it suggests that most people are really crazy in the amount of risks they take. This brings us to the end of this episode. Remember to join us next week for our subsequent episode, and do not forget to check our previous posts. Thank you. Don't forget to subscribe. Contact us for account management. You can reach us on 080 375 97085. Thank you.